Good morning, ladies and gentlemen. A very warm welcome to you on this Tuesday morning for Dalal Street. The market seems to be taking heart from the fact that a lot of selling pressure has now been absorbed, and more importantly, there is little or no bad news left to react adversely to. So, for the moment, you have 24,579 on the Nifty, flat as flat can be. But what's really interesting is that the Nifty actually hit an early morning high of somewhere like 24,700, and from then on you've seen a mild profit booking about 120 points. So a sharp move that's come into the market for the last three trading sessions. We've seen a low of 24,340, which was on Friday 8th of August. Remember, this was a move that was subsequent to the US tariffs, and from then on, from 380 we've all gone all the way up to 720. So that's a very nice uptick, and this happens after five successive months of pain, 6 weeks of continuous selling, and therefore there is a lot of value buying happening at current levels. The IT index, by the way, is still up 240 points, so that's a very big plus if you see. And in the broader markets, you also have a very nice advanced decline ratio, 1500 shares in the green and 1000 shares in the red, which essentially means the advanced decline ratio is 3:2. You have a strong move coming into auto stocks, media stocks, IT stocks, energy, pharma and metal shares. So that's the broader structure of the market in terms of how the positioning is for Tuesday. This is absolutely the right time to welcome Mr. Rajesh Palviya, Head for Technical and Derivatives Research at Axis Securities. Namaste to you, Rajesh ji, a very warm welcome. How do you see this uptick that we are seeing for the last 2 days after 6 successive weeks of fall on the Nifty?
Namaste, Shalji. Looking at the near-term, short-term structure, still Nifty is struggling to cross its immediate hurdle of 24,650, 24,700, which is steep resistance for the Nifty for any kind of pullback which we are witnessing in the near-term perspective. Though Nifty has recovered from almost from its 100-day moving average territory and trying to hold above 100-day moving average. Uh, if Nifty has to move further higher, it has to hold about 24,500 on a closing basis for next 2-3 days. And if it's happen, then yes, we may see some pullback action towards 24,650, 24,700. The major hurdle and supply pressure is placed at 24,700. Any move above 24,700 could take Nifty further higher, and we may see some short covering action to trigger about 24,700, and then we may see further higher level. But on the bank Nifty, 55,400, 500 is the critical supply zone for bank Nifty also. So until the bank Nifty not crosses 55,400 zone, I think here also we may see some volatility to remain in the system. On the downside, 54,800 is likely to act as an immediate support area. So both indices I think may remain in tight range only. Only news flow, any positive news flow can manage to give breakout of this consolidation range. But still structure is on the weaker side for both the indices. Any negative news can spook furthermore supply pressure in market, and maybe we can see further lower levels. So I think one should remain on the cautious side of the trade. One should not go in one go to buy, though market is already corrected for 6 consecutive week, but still there is no sign of major recovery on the counters. Yes, there is some pullback because of most of the stocks were in oversold trajectory. We are almost trading near to 100-day moving average for Nifty. RSI was oversold, PCR ratio was also in oversold trajectory. Most of the earnings are already in the prices. So I think these all domestics, cues are already in prices, but the global cues from the Trump tariff is the key driver for the market at this juncture. And I think anything comes on the positive side from that news flow could give some sort of relief really in the market going forward.
Right. Rajeshji, what are you advising the Ultra HNI clients at Axis Securities in terms of future course of action? Are you telling them stay away from equities, or is there an advice to maybe buy at these levels? If yes, what are the suggestions?
So I think we have advised our clients to reshuffle their portfolio. The export we have asked them to trim down the exposure on the export oriented sector where direct tariff impacts are already giving hit on the stock prices and uncertainty is going to remain. So we have asked to trim down those position and to focus more on the consumption related theme where the domestic consumption could drive those sectors. So we are asking them to shuffle their position. So this is what we are doing it. We are not asking them to exit from the market because yes, it's a part and parcel of market to remain in the volatile manner because of some news flows or some headwinds can disturb the market sentiment. But it's not going to remain for forever. It's a short term pain which we are seeing in the market and going forward because we have already seen that rupee is already at lowest level and we have already seen that Trump has already imposed another 25% tariff. So I think most of the negatives are already in place. So now what is going to happen, any reversal on the lower side would give some positive sentiment to the market. So I think one should remain in the invested in the market. It's not time to exit. Yes, you can switch your position from the export oriented sector to the domestic related sector. This is what one can do at this juncture.
Okay. Rajeshji, when you request your Ultra HNI clients to focus on domestic themes, what are the maybe two or three sectors, maybe four or five stocks that you have advised them?
So I think three first themes where we are focusing. One is FMCG and consumable durable, and second is BFSI is also looking attractive, and third one is the real estate. These three themes where we are playing at this juncture. From FMCG basket, some of the stocks from FMCG pack, that is Dabur, we are bullish. DMart is looking attractive to us, and again Asian Paint, as we have already seen that there is a sign of bottoming out on the Asian Paint. So these three stocks from the consumption basket we are looking at on the bullish side to accumulate. On the BFSI front, I think ICICI Bank is looking more promising, and I think the way stock is almost hovering near to its all-time high trajectory. So this stock can also deliver good amount of return going forward. And HDFC Bank, these two banks are looking promising from banking pack. Again, on the real estate space, some of the stocks where we are focusing, that is, Prestige Estate as well as DLF. These two stocks are our preferred choice to buy in this decline. So almost price correction is already there in this stocks. So it's an attractive level to buy and accumulate these counter to play the domestic theme going forward.
Okay. What else is interesting to you in the large cap space? You've mentioned three major ones: HCL, my apologies, HDFC Bank, ICICI Bank, and Asian Paints. Anything from the side of maybe pharma that attracts your interest?
So we do have bullish view on healthcare space rather to have a bullish view on pharma at this juncture as still uncertainty is there towards the tariff. But healthcare space we are bullish, and from that space, Fortis Healthcare is looking more promising, and we are holding our bullish view for Fortis Healthcare as well as Medanta is also looking promising. Some of the spaces where we are still holding bullish view from the automobile, that is, Mahindra and Mahindra is looking attractive, as well as from the auto ancillaries. Uno Minda is also on our buying list. So auto and auto ancillary is another pack where one can focus. So if I go with the packing order, Mahindra and Mahindra, then from two-wheeler space, Hero Motor is our choice, and from auto ancillary, Uno Minda is also one can look at to buy and accumulate for near term to short term perspective.
Okay. Uh, Rajesh, because you have a very well equipped research team also, uh, what are the two or three or maybe more outperformers based on Q1 earnings that Axis Securities has advised their clients to take long positions in?
So I think we asked to remain invested in the banking space, and ICICI we are bullish. So we are asking them to buy and accumulate this ICICI Bank for longer term perspective, and results are also in line with our expectations. So ICICI Bank one can buy and accumulate. Another stock, as I already mentioned about this healthcare space. So here also we are asking them to buy Fortis Healthcare as well as Medanta. These two stocks are also looking very promising. And from FMCG space, yes, we do believe that there is a sign of bottoming out in the FMCG, and we believe that some improvement is going to happen in second half of this financial year. So I think some of the stocks from FMCG basket also looking promising. So one can look at Asian Paint as well as Dabur for buying and accumulate for the second half of this financial year.
Okay, just a note on Fortis, ladies and gentlemen. This is India's second largest hospital chain, and it reported a strong 17% rise in first quarter earnings at 2,167 crore rupees. It is both a year on year and sequential rise, and profit after tax is actually up 51% for Q1 at 267 crore rupees and almost 48% over Q4, which was 188 crore rupees. So a very, very strong move in Fortis is what the markets have seen over the last maybe 3-4 months or so, and it's been on a constant high. If you see Fortis at May of 2025, it was at 676 rupees, now at 920, and it's a very, very strong rally that has happened. That's an interesting theme to look at. Remember, both Fortis and Medanta are hospital chains which have been doing a fantastic rally over the markets in the last maybe 2 or 3 years. When we look at the space of pharmaceuticals, Rajesh ji, any favorites here? Because pharma was a space where July returns were fantastic. Many stocks like Divi's, like maybe the mid cap ones like Lupin, etc., showed a very strong rally. What is your top pick in the pharma segment?
So I think looking at the valuation as well as the looking at the price correction, we believe that Lupin can be looked at this juncture. We have already seen already stock has corrected from its recent high. So I think at this price point, we believe that Lupin is looking more attractive if we go with the pharma space. And I think any move about 2000 can take this stock back in the uptrend of its long term trajectory. Overall long term trajectory is on the bullish side, but yes, on the near term some corrective move is happening. So Lupin one can focus at this juncture. And I think another stock where where we are still holding our bullish view, that is Laurus Lab. Though there is some correction in the last couple of weeks, but still, if we analyze on the longer term time frame, one can look at the Laurus Lab also. Here also we could see good traction, and once stock crosses above 840, 850 zone, I think this stock will also resume its uptrend, and then we could see further higher level towards 900, 940 kind of targets on the higher side. So Laurus Lab and Lupin, these two stocks one can look to buy and accumulate in the pharma space.
Okay, fair point. Now, I think both of them, even Loris came out with a fantastic set of numbers, and Lupin's management was a part of our discussion on Business Today earnings. Both have done a phenomenal job. One thing that has completely deflated Rajesh ji is the PSU pack, and in particular defense counters. Do you have charts which show some kind of consolidation within the PSU defense space Many stocks have corrected maybe 30-35% from peak. In particular, shipbuilders such as Masgaon Dock, Cochin Shipyard, Garden Reach. How about BEL? There's been a massive correction on BEML and BDL as well. Is the worst over for them, or do we see more pain ahead?
Definitely, there is a substantial corrective move we have already seen in most of the defense related stocks, be it BL, Matsgaon Dock, HAL, Bharat Dynamics. All these stocks have corrected significantly. Looking at the short to medium term structure, most of the stocks are now available at a very attractive price point. If I go with the Matsgaon Dock, almost it's now trading near to its 200-day moving average support area and trying to hold that level. So I think here one can focus. 2600 is the key support area for Matsgaon Dock. If at all the stock manages to hold this level for next couple of days, I think some pullback action we could see, or some support buying action, value buying could emerge in this counter, and we may see further, pullback rally towards 3000, 3200 kind of zone. But 2600 needs to be defended by the stock in this correction. Again, if I go with the other defense stocks, BL, as we have already seen, long-term structure for stock is on the bullish side, but on the near-term perspective, some corrective move is happening. But yes, those who are looking for little medium-term to long-term perspective, BL is another attractive bet in the defense-related theme. So here we recommend to buy and accumulate this counter with stop loss of 350. On the higher side, once stock manages to cross above 410.20, I think here we could see further higher level. So these two stocks has potential again to resume their uptrend, and we could see good return going forward in BL as well as Mazgaon Dock also.
Okay. Uh, Rajesh ji, two or three sectors that have fallen off the radar, among them is software. Very sharp fall in July. In the index itself, about a 10% correction. August is also not looking good. Are these charts over for, you know, maybe bull operators, or do you see any value buying consolidation on any of the top four or five stocks, large cap stocks in the software sector, which are a part of the Nifty?
So there is no doubt that most of the IT stocks are in oversold trajectory, and we have already seen a very sharp selling pressure in last couple of week for most of the IT stocks. Yes, there is a sign of some buying action in some of the IT related stocks, and some pullback action is clearly visible in large cap as well as on the mid cap, both basket. Looking at the near term, short term structure, there could be chances that we may see some pullback action. So I think Wipro is available at very attractive price point, so one can focus here to play some pullback action. Though structures are still on the weaker side, but yes, as stocks are in oversold trajectory, so some pullback cannot be ruled out. So maybe in Wipro we could see pullback towards 255, 258 kind of zone, which is almost coincide with its 50-day moving average. So I think there is a room of some pullback action in Wipro, so one can focus here with stop loss of 236. Another large cap IT where we are focusing at this juncture, that is HCL Tech. Though there was correction, but stock is showing some early sign of recovery. Since last couple of days, stock is managed to hold its recent swing high of 1450. So I think till stock is managing to hold above 1450, we could see some recovery here also. 1550, 1590 would be the next level for HCL Tech in this pullback. So I think these two stocks from oversold trajectory is looking attractive. Again, some of the mid-cap IT stocks have shown very sharp recovery in last couple of days. If we go with the one of the mid-cap stock, that is Sonata Software, if you look at very strong recovery in today's session itself, almost 12% up move from its oversold trajectory. So I think one can buy these stocks, but needs to keep his stop loss also of previous swing low, because it's still overall trend is on the weaker side. So maybe any negative news can again, spoil this pullback action. So whatever you are buying for pullback trade should keep a stop loss of previous swing low. The same structure is for Coforge also. So here also there is a sign of recovery, but 1570 should be your stop loss if you are buying in Coforge for pullback action. On the higher side, maybe stock can move higher towards 1700 to 1730 in this pullback action.
All right. Sonata Software has, yes, fallen for 3 plus 7, 3 plus 6, 8 consecutive days. And on the ninth day, there's a massive bar on the long side. But we've seen Sonata Software also hit more than 800 rupees. So, nice value buying happening here. We don't know when the original price will come. That was, I think, 650. No, actually much higher. We've seen 865 in February of 2024, and from then on it's fallen to 300 rupees, and then just a bit of a recovery. Thank you, Rajesh ji. My one final question to you. Now, what is your advice to retail investors? We have seen very, very high inflow of mutual funds in the SIP format. So that one thing is doing very well. People are buying this dip and they are buying it aggressively. But what about traders? What is your view and what is your advice to retail traders now?
So definitely, the flow which we are seeing in the SIP, that clearly shows that there is a long-term commitment by the investor community to the equity market. That's why we are seeing that it's on the incremental side of month-on-month basis. So that shows that there is a still confidence on the street, despite of we are not able to hit new all-time high since almost for 10 to 11 months we are not able to break the all-time high trajectory. This is more than the COVID period itself. We have managed to recover in COVID and able to scale to the new all-time high in 9 months of time. But this is bigger than that time correction. So I think it's a tough day for traders also because a lot of volatility is happening, a lot of changes are done by the SEBI itself on the derivative side, and a lot of tweak one needs to do on their trading systems and strategies which they deploy on day-to-day trading activity. So I think our market is now evolving to the new phase of another leg of bull run. Sooner or later, yes, it's going to have a new all-time high. But yes, one needs to take position sizing is very important in these kind of market because every day there is a news flow and which is changing your trading stop losses or your position needs to taken care of these kind of news flows. So one needs to be light in terms of trading. Whatever activity you are doing it, do it majorly on the intraday perspective. Carry forward position should be always hedged with a covered put or you can have some other hedging strategy to hedge your open positions which you are carrying forward for very next day because you never know which news can impact your position on very next day. So I think these all things one needs to take care in to trade in this kind of volatile market and uncertain environment where every day there is a new news flow which is impacting to the sentiment of the market.
Right. With that, Mr. Palviya, thank you for your time. And as always, it's good to talk to you.
It's
We
my
hope to meet in person when I'm in Mumbai. Thank you for your
sure.
time, sir.
Thank you, sir.
That, ladies and gentlemen, was Mr. Rajesh Palviya, Head of Technical and Derivatives Research at Axis Securities. He has only large caps in mind, advises to look at long side in ICICI Bank, HDFC Bank, and also Asian Paints. Markets are light and they are volatile. This could probably be the best time to start a good SIP or put in an extra SIP in your existing holding. That, ladies and gentlemen, would be the best advice at this point of time when the future looks a little hazy at the macro level. Thank you for watching. I'll be back at 2 p.m. shortly. Good morning, ladies and gentlemen. A very warm welcome to you in a fresh week on Business Today Television. We start